So before Memorial Day, I was talking about expensive options, but I want to share with you the VIX, and I want to talk about what's cheap out there as we head into the month of June. So this is a monthly chart of the VIX. VIX is the Volatility Index. We look at the stocks on the S&P 500, and it looks at those together, and it's able to give us an idea of what option traders feel is happening in the markets. I've taken this monthly chart of the VIX, which goes back to October of 2019. All right. So this is over 5 years of VIX data. And the reason I'm not looking at hourly or daily or even weekly charts is I want to push all of this together to give you the 40,000 foot view of this. Right. The 40,000 foot view says this. We see a lot of period where the VIX just goes low and stays low. And then there's these areas where we see these volatility spikes that happen. The volatility spikes you see I'm talking about right now, that was the COVID spike. Afterwards, when we got the V-shaped correction in the market, part of that had to do with the fact that we saw volatility dropping, and we had 12 months of volatility drop prior to COVID. We had 15 months of drop post-COVID. Then we went into 2022, and you know what happened then? We hit the bear market. Interest rates rose, and so did the VIX, and we went back up from the teens in VIX, the low teens, all the way up to above 30, and we sat up there for a while. Then we started seeing that drop, right, where we really saw from above 30 back down into and below 15. We got down to, I think, as low as the high 12s, and that was in 2024. And then, of course, coming into July 2024, we saw a huge spike, which then came right back down. And then once again, earlier this year, in March and April, huge spike, which ended at the beginning of April, came right back down. And as we're coming out of May, coming into June, we're in the high teens. What does this tell us, if anything? Well, it tells us that typically after these spikes, we see several months of moves lower. Now, we did get a call it from July to April move lower of 1, 2, 3, 4, 5, 6, 7 months. All right. So should we expect several months of moves lower? Well, typically what happens is when we get that sell in May and go away signal, that's typically no good. It's usually buy in May and sell in July. But that may have already preceded us. What I do see is I see a potentially lower VIX heading into the summer. And so with that being said, why don't we talk about cheap options? So if we see lower VIX heading into the summer, but we don't know how many months it's going to head into, definitely the area that we want to look with is shorter term. And when I mean shorter term, I'm not talking about day trading here. I'm talking about, let's look at the month of June, maybe into July 4th. So I want to look at a ranking of implied volatility on specified stocks, where we've looked at the highs on all the optional stocks. We've looked at the lows on all the optional stocks. I want to find those stocks that have options that are trading, they are the cheapest of the cheap. So here we go. Top 10 cheapest options when we rank from high to low and where we currently are right now. Number 1 on the screen is Marathon Patent, all right? MARA. If you look at the high in the last year, it's been at a 144 in terms of implied volatility. The low has been at 74.65. And look at this. The last, as in current implied volatility, is equal to low. Same thing with MicroStrategy. Now, you might say, well, MicroStrategy's backed off in price. Yes, it has, but it's also backed off in implied volatility. It was at a 205 in the last year on the high side. 61.24 low, 61.24 last. All right, Zscaler, 77.99 high, 31.87 low, 31.87 last. And when I go down and look at the low and the last, I see that happening all the way down the screen. And you see these top 10 stocks, these top 10 cheapest optional stocks, the one thing that they all have in common is they're sitting on 1-year lows right now. Part of that is because the markets have rebounded. They've rebounded off those April 8 lows, and that is going to cause volatilities to come back. But these are cheap for a couple other reasons too. One of them is because most of these are post-earnings. That means the earnings are out of the way. The unknown has become known, and now we're seeing those drops. So these would be great option buys to buy some option premium if you believe that these stocks are either going higher or lower. If you see a bear in the mix, maybe you're buying puts. If you see a bull in the mix, maybe you're buying calls. I'm going to show you what I see. I see 4 of these that have something in common, and I see one that's already been moving. So let's talk about the 4 that are in common there. They're all related to Bitcoin in one way or another. Before I talk about those, and I'm gonna highlight one of those, let's talk about Zscaler, which is on the screen. It's already moving. So those of you that have been hanging out with me in System Mastery, you already know, and you already got this. You should have gotten this last Friday. So we had a surge in Zscaler, a volume surge. Typical volume per day in Zscaler is about 2.5 million shares. But last Thursday, this jumped to over 9 million shares. Hello, we see a massive move going into the stock. And then Friday, we needed to know if that move was real. Well, we knew it was real on Friday because here's Friday's move. And of course, here's Friday's move. And here's where we were coming into today. So we're talking about the setup. All right. And you guys all know, if you're part of System Mastery or you were part of this group, then you know what I'm talking about. Not going to get into details, but what I'm telling you is there was a bullish opportunity on Friday for Zscaler at around the 276 mark. And it closed out yesterday. It closed out Friday at 288. There's a target on this one that was not that far above 288. So that one has come and gone. Congratulations to those of you that spotted that. But let's talk about one of the 4 other opportunities that are out there if you feel like that this Bitcoin move is for real, which I believe it is. Look at Marathon Patent. We could have looked at MicroStrategy, but MicroStrategy is a multi-$100 stock. Look at Marathon Patent. So just a week and a half ago, you had Marathon Patent sitting up here above 17. And then on Friday, it closes at 14. And today, I think it's down a little bit lower. It closed at 14.12 on Friday. We were trading around $14 in the low 14s coming into what I'm showing you right now. 2 things. Stock has come down, has moved up. And this is obviously something that was $21 a share that came down to 10. And we're talking about from the beginning of the year down to 10. Even though Bitcoin's made new all-time highs since then, Marathon Patent hasn't. Marathon Patent is not something I want to buy and hold if I want to trade Bitcoin. If you want to buy and hold based on something Bitcoin's doing, then Bitcoin's where you need to be, or something like IBIT. But if you're a trader and you want to take advantage of possibly a small window where we could go up and tag those all-time highs and maybe move even higher, then this is not a bad idea. Because if we do go back up and we hit new all-time highs, then I believe easily Marathon Patent could be at 17 again. So I have to trade it. I have to look at trading it to the 17 area, or at least what could it do at 16? All right. So what I'm looking at with this black line is options premium. The option premiums have gotten very, very cheap. In fact, if you look at July 3rd, right before the 4th of July, the July 3rd 14 calls went out Friday at $1.25. So let's work with that. If I'm buying the 14 calls at $1.25, then that means that I'm paying. This is full intrinsic value, and it's going to be I'm going to be paying an at-the-money option. I'm buying premium. If the stock just goes sideways or lower, there's a potential loss there. Here's my maximum risk on the trade. What I pay for it. The break-even area is we want to take the strike price, the 14, and add $1.25 for it. So break-even as of the close of Friday was 15.5. And the expected reward, if we get all the way back to 17, well, now we're talking about something that costs us $125 that we can make a $200 profit on, which is well above the double, because the double is $1.50. So if you're looking at, the double is going to be 2.5, because if I buy something for $1.25, and if it can make 2.5, I basically double my money. So I could pop in here and say, all right, well, where's 2.5 out? Well, I take 14 plus 2.5, so we can get to 1650. This is a potential double for this trade. See it right there. All right, let's see where Mara was right before I went into the live program. Mara was trading at 1403. The call option was trading for $1.14, actually 9 cents lower than the $1.25 that I was looking at on my software. So a long call, if I bought one of these and I could get it for $1.14, that's $114 per contract. So there you go. I mean, taking our cheapest options, putting those together, and going from something that, there's 4 of them out there that are all Bitcoin related. Well, let's take one of those and let's look at our risks, our rewards, and our break evens on what's cheap out there for the month of June.